Mr. Silva, welcome to the program.
Pleasure to be here.
What's your take on the price of gold? It has moved to $2,100 range today, pushing higher into all-time high territory.
Yeah, great day to be here to talk about gold setting all-time highs. Certainly there's a lot of research going out today talking about technical analysis and where things might go if it settles above 2,100. Some are calling for 2,300 as kind of the midterm reset in terms of gold. I think what's more important, at least for investors, is more what happens to equities, because we've seen gold be very resilient facing some of the headwinds of higher interest rates and a strong overall market. But I think this type of a move, if it's sustainable, and certainly if it hits closer to 2,300, you could see a significant re-rate in gold stocks, which have really been beaten up over the last 12 to 18 months. So I think this is kind of the shot in the arm you might need finally to see these gold stocks.
Aren't they, on some occasions, beaten up for good reason when they make stumbles from quarter to quarter?
Yeah, I can't say their track record has been spectacular over the last 12 to 18 months. We've seen inflation hit costs. You've seen both on the CapEx as well as the operating cost side. So there is some justification for it, but I think we're seeing in 24 and 25 a slowdown in that cost inflation. I think for 25, if you look at sectors, the gold sector as well as the mining space in general has some of the best earnings growth, I would say even competitive with tech stocks.
And what about energy markets? We've had the big players in Canada's energy sector report results through the end of last week. Canadian Natural Resources had a very, very good week. It posted gains on all 5 trading days, including 8% on Thursday and 3% plus on Friday.
Yeah, I mean, they've been shooting the lights out, whether it was CNQ or Cenovus prior to that. We've been very bullish on energy stocks, especially looking at this as opportunistic when we saw kind of this lull as oil kind of fell below $75 and even $70. For us, that was an opportunity to pick up some very high quality names like a CNQ or a Cenovus, and some of the names we'll talk about later in the show, which in particular give you good leverage to what we think will be an improving Canadian Select differential that's coming in the second half of this year as Trans Mountain kicks into full gear in the second quarter.
The latest news on the Trans Mountain pipeline expansion was another cost overrun, but you are nonetheless confident that when it arrives, and it's supposed to arrive in the first half of this year, that is when shipping actually begins on the pipeline, that we will see a narrowing of that differential, eh?
Yeah, because in MEG Energy's conference call for Q4, they mentioned, I think it was at the end of February, there was a call from Trans Mountain for 2.1 million barrels in April and another 2.1 million barrels for May. I think that shows a high level of confidence that they're going to be on track for a start sometime in May or even in June. And that will lead to at least what we think is a $4 improvement in differentials into something that is more, historically common with respect to the differential.
Why would it not be priced in at this point?
I think part of it is people wonder, is it on time? There's always some skepticism. We have seen increased competition in part from South America on the call of the U.S., looking for more from places like Venezuela, which is heavy oil. But I think at the end of the day, people do have a preference, whether it's in the U.S. for ultimate markets or China for, if you're going to look at heavy oil, places like Canada to supply that.